Hello everyone. My name is Rahelia Parwati, and my ID number is 234111051, and I'm in class MNJ23C. Today, I'll be discussing the topic of financing institutions. This video is part of my coursework, and I'm excited to share what I've learned with you. Let's dive in. Definition of financing institutions. A financing institution is a business entity that focuses on providing credit or financing to consumers to purchase goods or services. The types of financing provided can be very diverse, including leasing, which is a lease with an option right, and venture capital that supports startups with long-term funding. In addition, there is also factoring, a service that helps companies manage their bills and cash flow by purchasing accounts receivable. This institution plays an important role in the economy by increasing people's access to financing for needs such as purchasing vehicles, property, and business equipment, thus driving overall economic growth. In addition to types of financing such as leasing, venture capital, and factoring, financing institutions are also often involved in consumer financing. This includes unsecured credit, KTA, credit cards, and motor vehicle credit, KKB. Through these facilities, people can more easily access the goods or services they need without having to pay directly with cash. The existence of financial institutions helps drive the economy by encouraging consumption and investment, as well as providing flexible financing solutions for various levels of society. 1. Types of financing institutions. 1. Leasing. Leasing. This institution provides capital goods to be rented to other parties with the option to purchase at the end of the lease period. Examples include renting heavy equipment for construction or production machines for industry. 2. Factoring. This financing institution buys accounts receivable from companies. For example, a company has accounts receivable from its customers and needs funds immediately. The company can sell the accounts receivable to a factoring institution at a certain discount, and this institution will collect the receivables from customers. 3. Consumer financing. This institution provides loans for consumption needs such as purchasing motor vehicles, electronics, or home renovations. The process is usually faster and the requirements are easier compared to bank loans. 4. Credit cards are a loan facility in the form of a card that can be used for transactions to purchase goods or services with an installment system or full payment at the end of the month. Credit cards are usually provided by financing institutions that work with banks. 2. Role of financial institutions. 1. Accelerating economic growth. Financial institutions provide sources of funds that can be used by companies and individuals for investment, production, and consumption. This helps drive overall economic growth. 2. Increasing public purchasing power. With the existence of financing institutions, people can buy goods and services that were previously difficult to reach due to limited funds. For example, with credit facilities, someone can buy a car or house with an installment system. 3. Facilitating access to financing for SMEs. Small and medium enterprises, SMEs, oftentimes have difficulty getting loans from banks due to lack of collateral or credit history. Financing institutions provide alternative solutions with more flexible requirements and faster processes. Governing regulations. In Indonesia, financing institutions are regulated by the Financial Services Authority, OJK. Several important regulations which regulates the activities of financing institutions, including 1. OJK Regulation No. 29/POJK, May 2014, regulates financing institutions including procedures for establishment, business activities, and supervision. 2. OJK Regulation No. 35/POJK, May 2018, regulating good corporate governance for financing institutions. Next, examples of financing institutions in Indonesia. 1. Adira Finance, one of the largest financing institutions in Indonesia that provides various financing products such as motor vehicles, electronics, and furniture. 2. BFI Finance, focuses on multi-finance financing including financing for vehicles, heavy equipment, and property. 3. Astra Credit Companies, part of Astra International that provides financing services for motor vehicles and heavy equipment. Future challenges and opportunities. Institutions' financing faces several challenges such as the risk of bad debt, strict regulations, and competition with fintech. However, opportunities are also wide open with the development of digital technology that simplifies the financing process and expands access to more consumers. Maybe that's all I can say. Hopefully the material this time it is useful. Thank you. Wassalamualaikum warahmatullahi wabarakatuh.